Cboe VIX volatility index in the high 40s right now after spiking close to 60 in the wake of President Trump's tariff announcement, with BTIG technical analysts saying the so-called fear gauge is at a level indicating panic. Stocks are moving to the upside right now, but with uncertainty still high, investors may be looking to the options market for potential plays. For more, we've got JJ Kinahan. He is the CEO of Tasty Trade. JJ, always a pleasure to speak with you.
Hey, Madison.
Talk to me about what you're seeing right now. We've got stocks flipping into the green at the moment. You've got your S&P up nearly 1.5% after record selling. Just want to start there before we get into options. What are you kind of seeing playing out in terms of the price action this morning?
Yeah, well, it was crazy. Talk about panics. I sat in a chair about 10 minutes ago to do sound checks, et cetera. And all of a sudden it was a panic to the upside. What's happened over the last 10 minutes has been absolutely unbelievable. And you think about, where we've come from just in the last little bit here. You saw VIX that, as you started was just over 50 earlier this morning, now trading about 42. In fact, it got down to about 38 a few moments ago. But overall, what it's telling you is that people are still coming for protection. People are afraid of the downside. And, we went through this long period with very little volatility, and volatility came quickly. It's the old expression on Wall Street in general. The market goes up the stairs and goes down out the window. And it certainly took a dive out the window here. And again, VIX being a correlated product, and that as we go down, volatility goes up. You saw the exact opposite happen with VIX, and that it did explode over the last few days. That said, I think for your viewers overall, particularly your retail traders, take a breath, because you can see how volatile just this morning has been overall. And I think the thing you really have to do is, if you're going to be trading right now, really think in partials and think smaller amounts, because things are happening so quickly. There's no reason to have to pay off or sell bids, put things in at prices you like. And the market's natural back and forth on days like today give you an opportunity to get things filled at a nice price. But again, if you go in too big to either buy or sell, I think you're going to regret that later.
So do you recommend, or how do you think retail investors should be thinking about buying at these levels now that we are seeing a little bit of a move to the upside?
Well, I think that one of the things you want to think about for those who are comfortable trading options, this is a time where, stocks like Apple, you can go pretty far out of the money. You can go to the 125 puts and get over $1 for that put. What does that really mean in simple terms? That means that if Apple stays above 125, you keep your dollar. But if it happens to go below there, your actually break-even price is 124. Are you comfortable buying Apple at that level is really the question you have to ask yourself. But because volatilities are high, this is a time those who want to buy stocks will often use selling puts in order to do so. The thing I like about that strategy during times like this is that even if you're wrong, you make money. What you're trying to have happen is you buy the stock at a level you want. But if you're wrong and the stock goes straight up and you never get to buy the stock, you still make money. Because you keep the premium. That doesn't happen too often on Wall Street, where you're wrong and you can still make some money.
And JJ, just to add to the confusion at the moment, stocks are back to being in the red. And now that we have been talking a little bit, we've got your S&P off about 0.7%, and your tech-heavy NASDAQ off about 0.7%. But I do want to bring our guest host, Chris, back into the conversation. Chris, how are you thinking about this move this morning, and anything that you want to ask JJ as well in terms of the options action?
Well, I am totally with JJ. I understand the point. There's a lot of volatility out there. Quite right. I'm curious, though, about how much put buying you think the market's done in aggregate, because obviously it's a terrific indication of fear, and it was building last week. Would you say we've almost done enough put buying? I mean, that's often a sign the market needs to find a floor, at least temporarily.
Well, yeah, and you did see people buy more puts than calls. I think you have to be a little bit careful of looking at that, Chris, for one reason, and that is you're not sure, A, why people are buying them and what's on the other side of the trade. Again, options being a derivative product, you're never quite sure what people are doing it for. But to your point, we saw the biggest amount of options ever trade last Friday. We saw puts and calls fairly even, which you don't normally see. To your point, Chris, it's usually more calls than puts. So people have absolutely been coming in for protection. And so, you're seeing VIX hold up. When you see VIX hold up, shows me that They may not be as aggressive in their buying, but they're certainly there to buy. There are very aggressive bids for puts. It's not backing off at all. People want protection. And quite honestly, people may want protection both ways because we just saw how quickly the S&Ps can rally 200 points and come back down. So you may see people who are buying both sides, or if they're long stock, selling their calls in order to buy puts, because they want that protection and they just don't want to pay a lot for it.
So, JJ, as we get to wrap up, and it's funny, Chris had just mentioned that exact same thing earlier in the program here, but JJ, what is your single best idea for investors right now who are freaking out about their portfolios, who want to hedge?
I'll give two, because of her single greatest idea is to say stay small when things are going crazy and not trade very big overall. The second thing I would say is really, and it's what we see in our client behavior overall, you probably want to go to more broad-based index rather than individual stocks right now, spiders, QQQs if you want to trade ETFs, or SPX, NDX if you want to trade the big boys. And the reason being, you're not, with earnings coming up, et cetera, you have a single stock risk coming up starting this week, which on top of everything that's going on in the overall market, I'm not sure most people want to take on right now.
All right, JJ, always great to have you. Thank you so much.
Thanks, Madison.